Why is it that you believe that midcaps are an exciting opportunity?
Over the last 5 years, investors have trebled their money in this index. Over the last 10 years, money has gone up 5 to 5.3 times. So that's fantastic compounding.
So how does stock selection approach change when there's volatility, when the market conditions change?
At Trust Mutual Fund, we have a very high bias towards growth style of investing, and most of our filters, our screeners, our ideation processes are geared around finding the highest growth companies within their sectors.
Do you think that it's possible to identify alpha generators early, especially in midcaps?
If you need to create extra alpha over and above what the returns have been, one needs to pay attention to
Hi everyone and welcome. Today we're focusing on one of the most talked about and one of the most misunderstood segments of the equity market, and that is mid-cap stocks. Mid-caps have historically been some of India's biggest wealth creators. They are companies in transition. They're moving from potential to performance, from ambition to execution. But they're also a lot more sensitive to cycles of liquidity and investor sentiment. आज के मार्केट एनवायरनमेंट में ये सवाल बहुत रेलेवेंट है. क्या मिड कैप्स अभी भी अपॉर्चुनिटी है या रिस्क ज्यादा हो चुका है? In this episode, we'll examine why mid caps matter at this stage, how portfolios are built in this space, and what really drives sustainable alpha. Joining us today is Aakash Manghani, who's the fund manager at Trust Mutual Fund. He's closely involved in building and managing mid-cap strategies with a strong focus on bottom-up research, business quality, and long-term growth visibility. He works at the intersection of opportunity and risk, identifying the right businesses which can make a difference, talking about how discipline remains critical. आज हम उनसे जानेंगे कि मिड कैप इन्वेस्टिंग में अल्फा कैसे जनरेट होता है, कैसे स्ट्रॉन्ग कंपनीज पहचानने जाते हैं और कैसे वॉलेटिलिटी के बीच भी लॉन्ग टर्म फोकस मेंटेन किया जाता है. So let's get straight into it. Thank you so much, Aakash, for joining us today. Now, let's talk about mid-caps because you're launching a mid-cap fund. But why is it that you believe that mid-caps are an exciting opportunity?
So very interesting question, actually. If you look at the mid-cap cohort of stocks in our country, we've got about 150 stocks, and they've evolved a lot over the last 5-7 years, right? If you go back 15-20 years, the mid-cap universe was only about 7-8% of the overall market cap in our country. As of today, the mid-cap universe has become about 20% of the overall market cap. Now, these 150 stocks, as per the IMFI classification, reached from a market cap of about 35,000 crores all the way to 1 lakh crores. So, fairly large segment, 20% of the entire market cap in our country. Our country's market cap is about $5 trillion. You can't ignore this large segment. Also, we've seen that mid-cap index, right, over the last 5 years, 10 years, 15 years, has actually been the best performing index in our country. Over the last 5 years, investors have trebled their money in this index. Over the last 10 years, money has gone up 5 to 5.3 times. So that's fantastic compounding that the index has offered. And the reason why the index has offered such fantastic compounding is the sheer earnings growth profile of the underlying companies in the index. So that's why we think that mid-cap should be a structured allocation for most investors who have a time horizon of 5 years and beyond. So that's the reason why I think it's an opportune time to do mid-caps. So let me just continue. Why now, right? That's pertinent. So mid-caps is essential compounding part of your portfolio, but why now? We've seen over the last 5-6 years, India has been in a rip-roaring rally, specifically post-COVID, right? From the lows of COVID, markets went up significantly, small cap, mid-cap, large caps, everything went up significantly. However, over the last 17-18 months, mid-caps have gone through a consolidation phase. Entire market has gone through a consolidation phase, right? Mid-caps valuations were significantly expensive back in late 2024. But we've seen now valuations have corrected a fair deal and now are in sync with the last 5-year median valuations. So I think valuations are good. Earnings growth is stupendous, and we'll talk about that as we move on. So I think it's a good time for somebody to come in with a 3 to 5 year horizon.
So let's talk about stock picking when it comes to mid-cap. What criteria do you need to look at, macro or micro, and how do you build the portfolio at Trust Mutual Fund?
Right. So both macros and micros are important, right?
Okay.
In stock picking and long-term sort of investing. Although over the really long term, the macros sort of are not as important, but the micros sort of outweigh, right? So for us, I think what we go about doing is first identify the macros, right? So we go sector by sector and understand what is the opportunity size for that sector? What is the government doing to incentivize growth within that sector? How is the external environment for that sector, right? What consumption patterns are driving macro drivers for that sector? So there are multiple things one looks at when identifying whether the sector is attractive or not. Interestingly, over the last many years, we've seen multiple mega trends have emerged within our country, right? Prior to COVID, we had this wave of, for about 10 years, where a lot of consumption-oriented sectors did phenomenally well. You had financials, you had consumptions. But post-COVID, we've seen, because of the government impetus on increasing capex, making India more Aatmanirbhar in various sectors, be it defense, be it electronic manufacturing, semiconductors. Also, we've seen that in sectors such as digital, where because of proliferation of mobile data, pretty much everyone owning smartphones in our country, digital adoption curve across various businesses have gone up. That has led to the rise of various new models like e-commerce or fintech. So multiple megatrends have emerged in the last 5-6 years alone, right? And it's very important for us to figure out whether this megatrend, we're calling it a megatrend because we believe that it's going to continue for the next 5, 10, 15 years, right? So longevity of growth obviously becomes very important. That's the macro part. Then one needs to look at how is the competitive intensity within the sector. The megatrend might be there, but will I as an equity investor make money within that megatrend? So in a lot of these sectors, fortunately as equity investors, the competitive intensity is not as high.
Okay.
Right? In each sector, you've got few champion players who emerged, be it, let's say, electronic manufacturing, you've got 4-5 players in the listed ecosystem who've emerged. In e-commerce, we know that as, it used to be many players, only few players have sort of, in fintech also, very few players. So competitive intensity has sort of narrowed down significantly, I would say, in the last few years, which allows investors to sort of bet on a few players who can continue to do well. So that's the macro part, right? And obviously, we understand that India at a macro level is positioned very favorably as compared to most other emerging markets or even developed markets, right? Our GDP growth has been fairly rock solid. So that's one thing. Then one moves to micros. And it becomes very important for us to kick the tires and understand typically what these businesses are doing different from their peer set, either in the listed space, unlisted space, or competition from outside of India. In the long run, we've seen that betting on the right management team, betting on the right promoter becomes extremely crucial, right? And you could be in the same industry and two different sort of styles of managing the business, you could end up getting very different outcomes. So when we look at micros, right, one needs to understand the business model, obviously, right?
Yeah.
What is the difference that the company is trying to do? What sort of moat is the company trying to create? Is this in the moat creation phase, or it has already a moated company and sort of trying to maintain its moat? What is the capital efficiency of the business? Typically, we look at ROEs, ROICs in these businesses, right? So the history of execution typically becomes very important. And over the last 20-25 years, people who made a lot of money in the Indian stock market through small caps, mid caps, or even large caps have realized that the number one thing that matters is execution prowess, these managements, right? A lot of managements will talk big, but sometimes are not able to execute through. Right? So India is a very diverse, complex market to navigate. And pick up any sector, there is a vast opportunity, whichever way you look at it, right? So whether you're able to execute on that opportunity, it truly determines whether you succeed on the stock market or not.
Yeah.
So this is how we sort of understand management's capability, and we are backing executors.
So just to dive in more into the process of stock selection, do you think that it's possible to identify alpha generators early, especially in mid-caps?
So the midcap index itself has been a multi-bagger. We've seen over the last 15 years, the index is up 9.5-fold. Over the last 5 years, the index is up, 3-fold. Over the last 10 years, the index is up 5-fold. So you don't need to do anything different, but just to be there, right? And patience is rewarded in our market. But if you need to create extra alpha over and above what the returns have been, one needs to pay attention to the companies which are doing phenomenally well, who are continuing to build business models which can have longevity of earnings growth, right? If you look at the last 1 year alone, the midcap index is up about 7 to 8% as of 2nd Feb. However, the top 50 companies have given a median return of 30%. The bottom 50 companies within this index have given a median return of negative 19 to 20%. So if you've placed your bets right, obviously you would have made phenomenal returns, right? And every year you have a different cohort of companies doing much higher returns in the index. So one has to be, having your ears to the ground to understand what really is happening, what really is changing. It's a super volatile market we've seen over the last year and a half. What matters really is earnings growth of companies.
Yeah.
Truly. So are earnings growth increasing? Are earnings growth decelerating? Is the sector conducive today, or is the macro backdrop in the sector conducive today or not? So that really determines whether the company will do well or not in the short to medium term. In the long run, it's obviously the earnings.
Okay. So you said you need to have your ear to the ground. So how does stock selection approach change when there's volatility, when the market conditions change?
Right. So honestly, stock selection approach doesn't change. At Trust Mutual Fund, we have a very high bias towards growth style of investing. And most of our filters, our screeners, our ideation process are geared around finding the highest growth companies within their sectors. So we don't change our stock selection process, whether it is a falling market or a sideways market or a bear market, right? But what happens from time to time is obviously the macro backdrop may be not conducive enough for a particular sector or two, right?
Mm-hmm.
For example, we've seen in the last year and a half, the macro backdrop has not been conducive for IT companies, right? Where there's a lot of threat around AI, around slowdown and things like that. So one may not have a very high allocation towards the IT sector, right? The macro backdrop was not conducive for chemical companies over the last 3-4 years because they faced a lot of competition. China has been back in the market. But prior to COVID, the macro backdrop was very conducive for chemical companies. So there are winners in each of these sectors, right? Whether to overweight that sector, underweight that sector, whether to have 3 bets or just 2 bets or 1 bet within that sector is a function of how the macro backdrop is for the short to medium term perspective. So essentially the stock selection process won't change, but the macro backdrop determines whether to be overweight or underweight the particular sector.
Okay. So what's your take on valuations for midcaps today, and how do you determine whether growth is actually becoming expensive?
So interestingly, valuations for midcaps have come off in the last, I would say, 17-18 months. We peaked out about 36 times 1 year forward in about September of 2024. As of today in Feb, we are about 27 times, right? Now that compares to 21, 22 times the large cap indices. So on an absolute basis, we are more expensive than large cap. However, one needs to look at relative, right? When I say relative, we look at something called as PEG ratio, price earnings growth. So on a PEG basis, 27 PE on a forward earnings growth rate expectation of about 20-22% looks fairly attractive. Same for the large cap indices, NSE 100. The PEG is closer to 2, right? And also, many a times what happens is that people project very high earnings growth in India, but execution doesn't come through. Interestingly, we've seen over the last 4 quarters, the mid-cap earnings growth has been accelerating. 3 quarters back, it was about 21% for the entire cohort of 150 companies. The latest quarter 2, which got concluded, the earnings growth was a staggering 34%. Right? Compare that to large cap indices, it was only about 8 to 9%. Right? You can't expect these large cap companies to anyways grow at 25-30%. However, for mid cap, not only earnings growth has accelerated, the earnings growth expectations for FY26 and FY27 has been revised upwards by a decent amount. That's not happened for any of the other 2 indices rather, large cap and small cap. So I think valuations have corrected and earnings growth has not gotten corrected. It's in fact gotten revised upwards. So you are much cheaper off, right, as compared to what you were. So it's a good time. Also, I may add, we talk about long-term returns of mid-caps. They've been fantastic. However, there are periods of volatility. These returns are never linear. Between end of 2020 to September 24, mid-cap index compounded at 31% CAGR, right? It even outdid the Nasdaq index, which is the best performing index over the last many years. So after stupendous returns of 4 odd years, you had a time correction. Typically, time corrections don't last more than a year and a half in India, if it's not a bear market globally. So I think it's a good time for somebody who wants to come into the market fresh.
So which are some of the themes that you're most excited about for sectors? Where are you cautious?
Right. So there are a lot of sectors, so they're spoiled for opportunities. So let's start with financials, for example. It's the largest sector within our market cap. Even within mid-cap, it's the largest sector. Within financials, we're very excited about the capital market ecosystem. You've got EMCs, you've got exchanges, you've got capital market intermediaries. So from a here and now basis, sure, the markets have not done well. So their revenues are linked to how the stock market is doing in a certain way. However, from a longer term basis, from the next 5 to 10 year perspective, this is a sector which can do phenomenally well and probably offers earnings growth compounding of the order of mid-teens and even beyond. So that's one sector, capital market ecosystem. We're very bullish on mid-cap banks. They're doing fairly well. Earnings growth has picked up. Credit growth has picked up for some of these banks because their balance sheet sizes are not as large as the large companies. And also their portfolio is positioned actually in the sweet spot and the right spaces, be it gold or be it MSME. That part of the market has been doing fairly well over the last year and a half. I think that trajectory will continue over the next couple of years. And there are select NBFCs which are actually sort of doing fairly well. They were doing well over the last couple of years. I think they will continue to do well. So capital markets, NBFCs and mid-cap banks.
Okay.
Apart from that, there are a few other sectors where we think disproportionate returns can be made in years to come. The entire manufacturing ecosystem. Right? We've seen in the last couple of days, India has signed the US trade deal. We did the EU trade deal, which was long coming, obviously, and we've done various trade deals with various other countries. Over the last many years, it's been government's focus to increase the manufacturing share of GDP from mid-teens to a mid-20s figure. I think there are a few champion sectors that the government wants to create. Electronic manufacturing has been one sector which has done remarkably well over the last 5-6 years and which will continue to do well with semiconductor ecosystem trying to get created in India. So that's one thing. The other thing is because of trade deal, you've got various sectors which are probably getting a new lease of life. Could be chemicals, could be textiles, right? So manufacturing is obviously one thing. Then you've got this 𝗧𝗵𝗲 theme where government is wanting to focus on self-sufficiency. Primarily, we've seen that in defense ecosystem, for example. We used to import a lot of content maybe 10 years back. Today, the import content has fallen to maybe around 20-25%. And the spend on defense has gone up disproportionately over the last 5-6 years.
Yeah.
Looking at the way the world is, I think that will continue. So defense ecosystem is again one thing. And there are multiple other subsectors which I think around consumer discretionary, which can do phenomenally well. The sectors which we are not so bullish on are the sectors which don't offer growth rates higher than the nominal GDP typically, right? So, for example, the IT sector, we aren't as bullish on the IT sector. Typically, the large cap IT companies, they are the slow growth companies. FMCG sector, volume growths are of the order of slow single digit. Utilities, for example. So, these are some of the sectors where we have consciously sort of stayed underweight or avoided over the last year and a half. And I think we will continue to do so.
Okay, that's interesting in terms of sector allocation, but typically over a market cycle, what kind of returns should an investor expect from a mid-cap fund?
So it's hard to give you forward-looking comments, obviously, right? So let me draw you back to what we've done in the last many years, right? And people know that this now because mid-cap has become a very integral asset class. 5 years, 10 years, 15 years, rolling returns or point-to-point returns. The mid-cap index is the best performing index across all major indices in our country. Even the volatility is not as high as the small cap index. So the risk-adjusted return also for investors has been one of the best over the last many years, right? And this has been on the backdrop of several issues. Talk about the last 5 years alone. Every day you wake up, there's a new issue to grapple with. You had COVID, you had, Russia, Ukraine, you had trade wars, you had geopolitical issues. You had economic slowdown, you had inflation, rising interest rates. So in spite of all of that, the mid-cap index has given stupendous returns. What can we expect in years to come? What we realized is that typically when you extend your time horizon to beyond 5 to 7 years, whether it is the indices or whether it is companies, their returns gravitate towards what the earnings growth is. So focus on earnings growth, right? And mid-cap index offers the highest earnings growth across the 3 large indices that we have, large cap, mid-cap and small cap, of the order of early 20s, no other index is offering you that kind of return.
Okay. And finally, what are the risks that you see when it comes to mid-caps? Because there's a lot of inherent risks that one needs to watch out for.
Sure. So everybody talks about macro risks, right? So I'll not get into too many macro risks because, but typically with these companies, one needs to look at bottom-up risks, right? Mid-caps are not really in the value zone, right? So you're paying up for growth. So you want to make sure that the growth continues. And we've seen that from time to time, when you pay up 30, 40, 50 PE for growing companies and the growth evaporates, or you have a lull phase for a year or two, returns get decimated. So you need to be razor sharp focused on what is the earnings growth every quarter, every year, right? We are focused on earnings upgrades and downgrades, especially when you're buying high growth, expensive stocks. Even when you have slightest of earnings downgrades, 2 to 5%, it could derate the stock a hell of a lot, right? So you need to be very focused on near-term earnings performance. Obviously, long-term is also important, but the long-term is a series of short terms, right? So earnings performance is integral. The other thing is when you're paying up for these companies a reasonably high multiple, you need to make sure that the moats that they have created or are creating are relevant in years to come, right? So we've seen in the last 5-6 years, the world has evolved a lot with AI, with consumption patterns, with new business models, new route to market. Traditional moats that some of these companies have created over the last 10, 15, 20 years may not be relevant in the current day and age. So you're paying up for a moat, but after 5 years, if that moat is no longer relevant, if that distribution prowess is no longer relevant, or if that brand equity is fading in the minds of the young cohort of consumers, your multiples will continue to derate, but you might be still getting earnings growth, right? So as an investor, one needs to be very cognizant of that. And thirdly, I've seen that in euphoric markets, which we have been over the last 4-5 years, I would say broadly, a lot of companies resort to unnecessary diversification, too much of capital raises. We've seen insane amount of capital raise in India that has happened, not only from the primary market, but even from the secondary market. Many QIPs, promoters offloading their stakes, and probably equity is cheap today, but that's not a right way to build businesses over the long term. Once in a while, you could do that. So we realize that there isn't enough cash flow in these businesses today. That's why companies are resorting to these kind of things. So you need to build sound business, and for that, cash flows, ROICs become very important. In a bull market, people sort of forget about it and just look at profit growth. So these are some of the micro things that are very relevant, apart from the geopolitical issues that sort of most people are aware of.
Thank you so much, Aakash, for giving us that perspective. It's very interesting to know how one should really be investing in mid-caps.
Thank you so much. Thank you for having me.
Thank you so much for that, Aakash. Great talking to you. तो आज की डिस्कशन से ये क्लियरली समझ आता है कि मिड कैप सिर्फ हाई रिटर्न्स का स्टोरी नहीं है, वो स्ट्रॉन्ग रिसर्च, पेशेंस और रिस्क मैनेजमेंट का भी टेस्ट होता है. From understanding valuation comfort to identifying promising sectors to even managing downside risks, today's episode has given us a very realistic and balanced framework for approaching mid-cap funds. I hope you enjoyed watching और भूलना मत लाइक, सब्सक्राइब और कमेंट करने को इस वीडियो पर. Thanks for tuning in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.